Who is this guy and why could he single-handedly cause the biggest Bitcoin rally in history?
Who the fuck is that guy? Who the fuck is that?
That guy is Larry Fink, and he's the CEO of BlackRock. And if you don't know BlackRock, it's the biggest hedge fund in the world, and they have $10 trillion of assets under management.
So huge, it makes me feel even smaller.
And BlackRock wants a spot Bitcoin ETF. What is the spot Bitcoin ETF? Can it really drive the biggest Bitcoin rally in history? What would this mean for Bitcoin and the price of Bitcoin? And most importantly, can you make money off that?
And then we can make $10 million.
My name is Ivan, and on this channel, I filter the signal from the noise in crypto, macro, and geopolitics. So what is the spot Bitcoin ETF and why does BlackRock need it?
Well, why do you need one? I don't know.
An ETF is a financial product that tracks the price of another financial product. A spot gold ETF tracks the price of physical gold. A spot Bitcoin ETF would track the price of physical Bitcoin. Why does BlackRock need this ETF? Can't they just go to Binance or Coinbase and buy Bitcoin there like we do?
No.
Your size is not size, but BlackRock's size is size. Big institutional investors, they can't just go to Binance or Coinbase and start buying coins there. They need approvals and they have rules and regulations they have to follow. How does this spot Bitcoin ETF work? BlackRock buys Bitcoin on behalf of its investors, and then it shares the profits or losses, and the investors buy shares of this ETF. A spot Bitcoin ETF is sometimes also colloquially referred to as paper Bitcoin.
If we're ever going to earn paper money, we have to expand our operation.
And why does BlackRock need that? Well, because they understand this is big business. There is going to be a big demographic shift towards digital assets and towards cryptocurrencies, and BlackRock wants to front run that. All the boomers, their children and grandchildren will inherit all this money, and millennials and Gen Z, they will buy a lot more digital assets and cryptocurrencies than their parents and grandparents did, and BlackRock wants a piece of that. And what does Larry think, the guy from the beginning? What does he think about Bitcoin? Well, let's have a look.
And I believe crypto will play that type of role as a flight to quality.
Now, flight to quality is not the only thing, not the only bullish thing that he said about Bitcoin. He said a lot more good things about Bitcoin recently, so surely this is good for price of Bitcoin, right? Recently, if you've been paying attention to the cryptocurrency markets, Cointelegraph actually came out with what turned out to be fake news about the spot ETF being approved. The price pumped, then it retraced, but it's been pumping ever since, and Bitcoin is up more than 30% in the last 3 or 4 weeks. So surely the spot ETF is bullish for Bitcoin, right?
Wrong.
But why would it not be bullish? So remember that I mentioned paper Bitcoin. One fear that Bitcoiners have is that the spot ETF could manipulate or rather limit the upside of the price of Bitcoin. And they refer to the gold market, which has seen equal claims about the price of gold being manipulated after the introduction of the spot gold ETF in 2004. And the same will now happen or could happen to Bitcoin after the introduction of these paper Bitcoin via ETF shares.
I am a strong woman, all right? I don't get manipulated.
So here's how this could or would work. Step number 1, you short Bitcoin via the ETF or via spot, or at least you put in big short orders on the ETF. Step number 2, you corner the market sentiment like this and create the impression that the market for Bitcoin is really bearish. Step number 3, market starts believing you and the price of Bitcoin is going down. And then step number 4 is that you either sell or rather buy back your shorts with a profit, or you buy Bitcoin at a lower price, what you wanted to do in the very beginning. Does this spot ETF mean that the price of Bitcoin will be manipulated?
Wrong.
No, obviously not. It's not that easy. You can't just run around manipulating financial markets. It doesn't work that way. There are rules and regulations, and in the US, the SEC is in charge of overseeing financial markets and making sure they are fair and transparent. And the second reason is actually that there is no real proof for this claim that the price of spot gold is manipulated or capped to the upside by these gold ETFs. I've looked around the internet and there was, I quote, scant evidence for this claim. For this theory to work, it would actually mean that the price of Bitcoin has to moon first. Because you could already do this now and nothing stops you from manipulating the price of Bitcoin in the spot market. But as we remember, our size is not BlackRock size. So if they wanted to make this really worthwhile, they would have to wait first for the price of Bitcoin to pump to make a bet against the price of Bitcoin really worth it. Fundamentally, the ETF is good for the price of Bitcoin for 3 reasons. Reason number 1, do you think Larry would be talking bullish about Bitcoin, would be shilling Bitcoin if he didn't vet the demand for this? Obviously not. He must know that there is demand for his spot ETF, and that's why he's going around the news shows talking good about Bitcoin when no one else was really daring to do that. Second, as we already mentioned, ETFs invest with size, and even a small percentage of BlackRock's portfolio, which is 10 trillion assets under management, and this is only one ETF, even a small percentage of that would be very good for the price of Bitcoin. And number 3, people who buy ETFs, they have diamond hands by default, because these are not Zoomers or millennials who paper hand their Bitcoin. ETFs are bought by boomers. ETFs are bought by institutions who get the money of boomers, so they want solid investments and they're not going to just sell the Bitcoin. They buy once and then they hold. So, all good? Can end the video here? That's it? Obviously not, because there is one more plot twist to come. Now, there is a narrative on crypto Twitter that the gold ETF, which came out in 2004, was turbo bullish for the price of gold and mooned the price of gold. And crypto Twitter is banking on the same thing to happen to Bitcoin. But gold actually mooned along with all other commodities. Look at the price of wheat, look at the price of copper, look at the price of oil, all mooned from the mid-2000s until the great financial crisis in 2008. Do we really know that gold mooned because of the spot ETF? Or was it just a commodity bull run and the spot ETF happened to capture the meat of the move there? And the most important question, will the spot Bitcoin ETF moon Bitcoin like the spot gold ETF supposedly mooned gold? Here is my contrarian take. This is
fake news.
exactly. I believe that the ETF is bullish for the price of Bitcoin. However, it will take longer to moon Bitcoin just from ETF inflows, and I believe I have the math to prove my claim. Now, my basic argument is this: ETFs do not buy as much as you would think, and they buy once and then they're done. So overall, the effect, the fundamental effect from ETFs buying will not be as big as people expect or hope for. Because look, for example, at spot gold ETFs. They only hold 2% of the entire market cap of gold, which is 200 billion that is held by spot gold ETFs. And gold has a vanity use case because we can use it for jewelry. Bitcoin has only a financial use case. We can only use it as a store of value, and to send money. Gold ETFs and Bitcoin ETFs will do the same. They buy once and then they're done. And they do not generate as much demand as you would think. And I'll give you an example here. Look at the Canadian Spot ETF. It has not really been in a rush to accumulate Bitcoin. Now, I get it. Canada is not like the US. It's a smaller financial market. There was a bear market. So the Spot ETF issuer probably wasn't in a rush to accumulate Bitcoin, and there might have been not as much demand.
Whoa, hang on, guys.
I understand, and they will probably buy more soon, but they weren't in a rush to accumulate, so I do not believe that other ETF issuers would be in a rush. My second argument, they don't trade the commodity, they just buy it and then they diamond hand it. Because look, for example, at the trading volume of gold, only 2% of the entire trading volume of gold comes from gold ETFs. And remember, only gold with a financial use case that is held by central banks, commercial banks, private people, institutions, not the jewelry gold, only that gold has a market cap of about 8 to 10 times the size of Bitcoin. So why then would ETFs buy the same nominal amount of Bitcoin as they have in gold? If gold has 10 times the market cap or 8 times the market cap of Bitcoin, why would ETFs then go and buy 200 billion worth of Bitcoin if they hold 200 billion worth of a much more liquid asset? But this would mean they have a 10 times bigger share of Bitcoin, which again is less liquid, less proven. Why would they do that? That would be poor risk management, in my opinion.
I'm in danger.
How much can we then expect ETFs to really invest? Well, we can compare with big institutional investors now. So for example, Grayscale, a de facto ETF and might be converted into an ETF soon, they hold about 600,000 Bitcoin, which was, when I started writing this video, worth about $20 billion. Now it's probably more. Michael Saylor holds 150,000 Bitcoin, so this is a little bit more than $5 billion right now. So again, just to underscore this point, if we have 10 spot Bitcoin ETF issuers and each of them buys $20 billion worth of Bitcoin, which is about what Grayscale has now, then they would hold $200 billion worth of Bitcoin. So let's say this brings the market cap of Bitcoin up to 1 trillion. Maybe it will be a bit more with some more inflows. This is still about 20% or a little bit less than the entire market cap of Bitcoin, compared to only 2% of the market cap of gold that gold spot ETFs hold. So I think they will buy just less in the next few years. And the question is, how much are they going to buy?
Somewhere between 700 billion and $1.3 billion.
One study is from Galaxy Digital, sizing the market for a Bitcoin ETF, and they think the impact in the first year alone will be at least 74%, and it will go down from there because the Bitcoin market cap will grow. I believe they are looking at the wrong numbers. I believe they should be looking at only the financial gold, only gold with a financial use case, and that would mean using their methodology that the impact will be less, about half, 35 to 40%. There is another study that I found, and I will link to all of these studies in the description, and it estimates the price impact to be between 56,000 and 113,000. Bitcoin after the spot ETF inflows would end up somewhere between those two. But unfortunately, the study does not give us any time frame. So here is my take. Don't get me wrong. This is definitely bullish, but I believe the actual inflows will not be as bullish as people expect them to be. And I believe it will take longer for all the spot ETF issuers to actually allocate or to achieve their target allocation, because it is just too narrow a door for everyone to go through at the same time. But here is the most important takeaway for you.
Stand now more than ever. You need to understand the importance of saving money.
You only have something to lose by not being allocated. Imagine I am wrong and Bitcoin doubles its price next year, which would bring it to a new all-time high, which I believe will not happen next year. But imagine I am wrong and you haven't allocated, because of me. And please don't come to this channel hating on me because I was a bear.
I am too smart. I am too smart. S-M-R-T. I mean S-M-A-R-T.
I think you should be allocated, but I believe you should be willing to stay patient because it might take longer than you think. Imagine Bitcoin does really moon hard next year.
My penis can only get so erect.
So time for a short recap. What have you learned today? Number one, spot ETF means a fund is buying Bitcoin on behalf of its investors and sharing the profits or losses. Number two, this is most probably great for the price of Bitcoin, but we don't know yet how great and when the impact of this will be. Number three, I believe it will take longer than people think. Even if it does take longer, you have only something to lose if you are not allocated to Bitcoin. If you like this video, like, subscribe, comment whether you think I'm wrong or right, follow my newsletter and join my Telegram group, which I'm going to link in the description. And until next time,
Screw you guys. I'm going home.